Escrow shortages are on the rise. What does that mean? What can you do to avoid it? I've got that and more coming up. My name's Mike Brown. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. One of the worst letters that you can get in the mail, it's a notice from the IRS, but the other one is a letter from your mortgage company stating that your escrow is short. And it doesn't even come off that way. It comes off like, hey, you owe more. Your mortgage payment is going up, sometimes up several hundreds of dollars. When you get that letter in the mail, I know what it feels like because I've received it before a couple of times. You feel like you've done something wrong. Oh my goodness, I've been underpaying my mortgage. You feel like it's not fair. Someone must have done something against you. But then the worst is when it sort of like, it sort of crystallizes and you have that epiphany like, oh wait, something is wrong. The worst is that it's a double whammy. You now have to pay extra on your mortgage because your escrow is short, but you also have to fill in the hole that was created over the previous year by paying too little. So what causes an escrow shortage in the first place? Well, when you calculate, or when the bank calculates your mortgage payment, they do their typical calculation of how much are you borrowing, what's the interest rate, and how long are you borrowing, what's the term of the loan, and that calculates your principal and interest payment. But those are just two of the four items that makes up your mortgage, your monthly mortgage payment. The principal and interest, then you add your escrow, and that escrow is your property taxes as well as your homeowner's insurance, okay? So those four components all make up your monthly mortgage payment. Your principal and interest, as long as you've got a fixed interest rate, that stays the same, just a little bit more principal and a little less interest every single monthly payment, so love that. But that escrow amount, your property taxes and your homeowner's insurance, that actually changes. Your homeowner's insurance, that price could change every single year, and your property taxes could as well. And so where do those shortages come in? Well, unfortunately, in environments just like we're in right now, where property taxes just about everywhere throughout the country are on the rise, right? So your property taxes are going up. And then homeowners insurance, as we know, coming out of the pandemic, those homeowners rates were staying steady, but then significantly rose as property values and repair costs and so on went through the roof, no pun intended. And so we're seeing right now a lot of escrow balances running short and people getting letters in the mail saying that you've got to pay more for your mortgage payment. So once you get that letter, how do you fix it? How do you solve it? Well, if you read the letter, it typically is going to give you two options, but the first one is the one that most people use, and it's the one I would tell you not to go with, okay? That first option is significantly increase your monthly payment. And that significant increase both covers up the shortage that was created from the previous year, but also increases the amount that's being deposited in your escrow moving forward to cover the higher homeowner's insurance premium and the higher property taxes. The reason why I don't like this option, even though oftentimes the bank makes it seem like this is your only choice, is because now you're paying even more than what you should pay, because you've got to fill in the hole from previous. And I've heard from folks where they have that new higher mortgage payment and that stays that way for a long time, ending up creating the opposite problem where you've got an escrow balance that is just flush and far too high. The option I prefer, instead of that significantly higher monthly payment, is to figure out what that shortage was created from the previous 12 months. And say it's $3,000, say it's $4,000, find a way to come up with that amount and pay that as a lump sum to your lender to backfill the hole that was dug from that short escrow, and then have a slightly increased mortgage payment to account for the higher homeowners premiums and higher property taxes. The reason why I like that is now you are on your new monthly mortgage payment and you can reset your budget at those new levels instead of having your budget and adjusting things accordingly significantly go up for the amount that you're paying on your mortgage and then hopefully go down again 12 months later. The second option of just paying off that that escrow shortage in one lump sum allows you to set your budget at that new higher mortgage payment, slightly higher, and be able to budget around that moving forward. So that's how you fix it, but how do you avoid it? To me, these are, again, one of the worst letters that you can get in the mail. So how do you avoid it? Number one, every single year you're going to get a escrow statement, an activity statement, just like a bank account. And I would take a look at it. Take a look to see, all right, really what came out, what was paid out of that escrow for your property taxes and for your homeowner's insurance, so that you can see, are you running a healthy balance, or is it threatening? At threatening levels, does it look like it's running too low or maybe even running too high? So stay on top of your escrow activity and your escrow balance. You'll get that statement once a year. Second, stay on top of the property taxes and homeowners insurance and how that delta is, how that's changing from year over year. Right now, we are in a season where property taxes are on the rise and homeowners insurance rates are on the rise. So be aware as you get those notices from your county or from your homeowners insurance, take a look to see what sort of increase are you seeing and be prepared that you might have to pay that extra in your mortgage because your escrow may run short. And then third, if you're seeing those rates on the rise, instead of just waiting, thinking, oh, I might have a problem here, you can request an escrow analysis at any time to just see what are the current rates and then compare that to what your new homeowners insurance will be or property taxes will be, so you can see if there's going to be a problem and head it off just in case. All right, well, there you have it. Most people, your monthly budget, your mortgage payment is going to be the biggest amount in that monthly budget. So you want to make sure that you're planning ahead and you're aware and avoid any of these surprises. So work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.